For decades, the American dream followed a specific blueprint. Hard work led to a house with a white picket fence, and visible success was defined by outright ownership. During this era, taking out a loan was a temporary bridge. Borrowing served as the means to get the keys, with the expectation that the debt would eventually vanish, leaving the asset entirely in the hands of the owner. That image of prosperity still defines our culture, but the financial foundation beneath it has shifted. Today, millions of Americans maintain the appearance of success while privately managing a heavy accumulation of monthly obligations. We can see the early seeds of this shift in the first credit cards, tools that initially promised convenience but eventually normalized the habit of carrying a balance. That habit has since expanded into overlapping layers of mortgages, student loans, and persistent personal credit debt. This raises a question about how our economy evolved. How did borrowing move from a tool of opportunity into a systemic requirement for survival? The change began as banks expanded their lending reach, paired with a massive wave of advertising that urged consumers to upgrade their lifestyles immediately rather than waiting to save. Over time, the concept of a temporary loan faded. Borrowing stopped being a short-term phase and became a permanent feature of the average adult life. Financing moved into every corner of the household, shifting from buying outright to managing a constant stream of payments for cars, education, and basic goods. For the modern consumer, managing these endless monthly payments has effectively replaced the traditional goal of total ownership. This chart highlights the pressure point. While average real incomes have remained relatively flat for decades, the baseline cost of living has climbed at a much steeper rate, creating a widening gap in the middle. Culture, now amplified by social media, fills that gap with the demand for constant consumption. Every day, we are surrounded by images of luxury and success that create a psychological pressure to keep up. But the data suggests that most modern borrowing is no longer driven by a desire for luxury. Instead, debt has become the primary way to bridge the gap for basic daily needs. Sudden medical emergencies, the rising cost of groceries, and expensive housing costs force immediate reliance on credit. When savings are thin, a single unexpected expense becomes a crisis that only more debt can solve. This creates a grueling cycle. People find themselves working longer and carrying higher stress, yet they must continue borrowing just to maintain their current existence. To understand why this cycle is so difficult to break, we have to look at the macro level. The reality is that the modern economy depends on consumer debt to function. National economic growth is fueled by consumer spending. If people stopped borrowing to buy, the growth that sustains the current system would stall. Financial institutions have built their models around this. They profit more from a consumer who carries a balance for years than from one who pays in full, creating a system that prioritizes the steady flow of interest over the final settlement of debt. The debt trap functions as a predictable outcome of this alignment, a system operating according to its core profit incentives. This structural reality takes a heavy toll on the individual. Constant financial anxiety has become a common baseline for those living one emergency away from disaster. The result is a generation-wide delay in reaching the traditional milestones of adulthood. Long-term debt forces people to put off buying homes, starting families, and eventually retiring. This institutional debt often begins at a young age, anchoring individuals for decades. It creates a weight that follows them through their careers and limits their ability to build actual wealth. Despite years of constant labor, many find themselves financially unstable and unable to escape the cycle. To be clear, debt is not inherently a problem. It provides the capital for businesses to grow and allows students to access specialized training that would otherwise be out of reach. The danger arrives when a society relies on borrowing just to maintain an ordinary life. When survival requires taking on financial obligations, the ability to make free economic choices is eroded. Ultimately, the pursuit of the American dream has evolved into a permanent, inescapable financial obligation.